A Hong Kong court has ordered the liquidation of China Evergrande. For a company that was once the pride of the Chinese real estate sector, it's been a dramatic downfall. I am joined now by Gary Ng, Senior Economist for Asia Pacific at Natixis. He joins us from Hong Kong. Thanks a lot for being with us, Gary. Can we just begin with developments where you are and this court's order to liquidate Evergrande? Evergrande's executive director has been at pains to point out that its Hong Kong-listed business is separate from its domestic business in China. So where is the impact of this ruling actually going to be felt?
Well, indeed, it is a very tricky point, as you have correctly pointed out, that most of the businesses of Evergrande is actually in mainland China. And of course, this court order actually comes from Hong Kong. Of course, I think for the company itself, it is indeed still a blow to the restructuring plan, because it has been trying to buy time to do whatever it wants, to delay the restructuring projects, or basically try to find a way that can muddle through. But of course, right now, when we see this liquidation order, it means that there will be third parties stepping in to decide, whether certain assets should be given to certain creditors. So this is definitely not something Evergrande would want to see. But I think on the macro level, for now, we do see limited impact, because it's hard to see China's real estate sector get worse.
Yeah, that's right. I mean, Evergrande shares fell 20% before trading was halted on the Hong Kong exchange, that is. But generally, markets have barely reacted to this news. Have they already priced this in, or is it actually the impact more broadly somewhat limited?
Well, I mean, if you look at whether there's any spillover effect, definitely there is, but the spillover effect hasn't been felt in most sectors. So if we want to look at, what kind of reaction the market has, first, of course, Evergrande and the related entities, they are the one who see the biggest decline in share price this year. A second, if you actually look further into some of the related troubled developers, that investors are worried whether they would end up in the same situation as Evergrande. I think this is also something the investors are worried about, that we do see a bit of sell-off in those names. However, beyond those, some of those state-owned developers, or even generally other shares in Hong Kong, it seems that the impact is still rather insulated. So I would say that this liquidation order will probably have impact on Evergrande and some of the other troubled developers only for now.
Yeah, but we will talk about how it is going to have an impact on China's property sector more broadly. But let's just remind ourselves of how bad things really got for Evergrande. It became the world's most heavily indebted property developer. It ultimately racked up liabilities of over $300 billion. To put that into perspective, that is more than Russia's entire national debt, or equivalent actually to 2% of China's GDP. So Gary Ng, the judge in Hong Kong, listed numerous reasons for the liquidation, but the key one is that failure to restructure its debts, right? Well, Executive Director Sean Su of Evergrande, he said, "We tried our best." Is that true? What's really been going on at Evergrande since it defaulted 2 years ago?
Well, indeed, it is a complex issue, because we all know that there is political fight, or basically the chairman of Evergrande has been held hostile, etc. So in this case, it's not purely a business case. It also involves certain power play within the company and versus regulators as well. So I think this is really why this case has become more complicated. But on the other hand, there's of course other rumors about Evergrande trying to use different channels to transfer some of the assets overseas, so that they don't need to pay back the either bondholders or shareholders. So I think this kind of financial tricks has actually worsened the matter. So when the regulators actually come across this case, this is actually rather tough. But beyond that, because of this weaker home sales and the general cash flow problem, it seems to me that it's a destiny that Evergrande will probably end up in trouble, regardless of the political factors that we have mentioned before. Because if you have such a high leverage, weak home sales, changing regulations, it's very hard for such a big company to turn around.
You say get into trouble. Do you mean that the wider Evergrande business and the domestic China-based business could also end up disappearing?
Well, indeed, I think one of the biggest of the scenario that we see with the highest possibility is that even if Evergrande survive after all this liquidation or restructuring, depends on how to call it or what kind of deals that we can see later, it won't be the same Evergrande that we see 10 years ago, obviously. So there will be a massive downsizing of the company. It's probably likely that the company will be forced to sell a lot of these valuable assets. For example, the property management part, which is relatively resilient given the the ongoing demand in the properties that already exist that people need services. So it's quite likely that Evergrande will be broken down into smaller companies, being shared or purchased by other investors. But for Evergrande itself, it's basically a demise of its own old business model.
It seems likely that the liquidators are going to want to try and utilize Evergrande's massive assets in China to help pay off its creditors overseas. Is that something that they're actually going to be able to do, though? Is that something that Beijing can prevent?
Well, indeed, this is probably the trickiest part that we see in this deal because of this different jurisdiction between mainland China and also Hong Kong. Because if you look at what happened in China already for Evergrande asset, actually a lot of them are already confiscated or under control by a different court order already. So when the Hong Kong court order comes, it also faced the difficulty of the lack of assets to seize, and also how easy is it to do it from the cross-border perspective. This is also something that is very hard to tell at the moment because we do not really see a lot of cases in the past. So the most likely scenario is that it's possibly that onshore investors will still be in the priority. Of course, home buyers, they will be taken care of for social stability. But for offshore bondholders and also shareholders, you simply do not know that whether you can get back or be part of this asset sharing scheme, or even like for shareholders, you never know, how much this Evergrande shares will be halted. It could last for a very long time. So I would say that offshore investors will probably be the losers in this case. And for winners, it's possibly that some of the onshore investors will have a better chance to recover at least part of the assets.
So does that mean that this makes it more likely that these millions of people who are waiting for their homes to be built, that they've already paid for, does it mean that they're more likely to get those homes?
Well, it depends on whether the government would step in or ensure that Evergrande will still have enough cash flow to deal with the problem. And of course, there's a chance that some of these projects may be sold to other developers or other state-owned companies can actually or taking care of this delivery. I think this eventually may happen. However, how long would it take? At what cost? I think this is really something that we are uncertain. So therefore, I think this will give two important implications. The first is that, the government will still prioritize the unit delivery, but it may take longer this time if Evergrande is basically end up in this liquidation process. Second, from a broader economic perspective, whether households are still confident in buying properties from some of these troubled developers, I think that there's also a very big question mark. So basically, this will delay the recovery of home market in China.
Can we expect to see further liquidations of Chinese property companies during 2024?
Well, this is actually quite possible. And of course, Evergrande is one of the landmark cases that everyone think of. It's the biggest one, and it's probably the first one that ran into trouble. However, we cannot forget that there's actually a queue of different companies who are also about to end up in court orders in facing this type of liquidation risk and etc. So these companies will probably face a similar dilemma as Evergrande face right now, because if such a large company doesn't have the resources to cope with the problem, I wouldn't be surprised that some of the smaller one with a similar situation as Evergrande, they will probably end up in the same situation of liquidation.
And what does all of this mean for China's image with foreign investors? Because China's already losing foreign investment. It posted a deficit in foreign direct investment last year. Its first ever quarterly deficit in that. Foreign investors are taking money out of the country. I mean, it seems obvious to me that this isn't going to help that fact, but can they claw that reputation back?
Well, indeed, I think this is really the worst moment to have the liquidation because we already see net foreign outflows, not only in direct investment, but from time to time from portfolio investment as well. Especially if you look at the situation in Hong Kong, which is pretty much a barometer of the China's investment for global investors. It has been performed quite badly in the past few years, and also in 2024 as well. So this explains foreign investors are still very wary of the China policy risk at this moment. So this liquidation plus the inability for foreign investors to recover the assets, and especially when they are queued or the repayment rank actually is lower than many of the other counterparties, then this will of course have a major impact on the foreign investor sentiment. So I think unless there is a very like a clear roadmap in terms of how the government would step in and deal with the situation, it's very hard to see the comeback of confidence from foreign investor in the short run. So it is indeed quite challenging.
And indeed, is Beijing getting any closer to solving the country's property crisis?
Well, I think one of the reason of the weak confidence that we see nowadays is that there's a very wide gap between what the government think they want the growth picture to be versus the market wants. And when I say market, it could be household, corporate, and also other investors. And I think if you look at what happened in China right now, then the authority would probably think that a growth rate around 4 to 5% is actually not too bad. Even when there is a real estate crisis, this is probably something that they want to lower the exposure to real estate. However, if you talk to household corporate investor, the picture is clearly different because we are talking about a situation that a household may have a high income growth of 7 to 8% in the past 10 years. Then all in a sudden, China is still growing, but income has declined or basically decelerate to somewhere 3 to 4%. So the same is true for corporate and also how investors evaluate the asset prices, etc. So therefore, I think this difference in the gap basically explain why the Chinese government doesn't seem to be very willing to have a very strong stimulus or relaxation on the real estate sector. And this, I think, pretty much explained that I do not expect this trouble or credit events that we see in the real estate sector will end anytime soon. We will see more in 2024.
Indeed, it's going to be very interesting to watch the property sector in China and the wider Chinese economy during the course of the year. Gary Ng from Natixis joining us from Hong Kong. Thank you so much for taking the time. And thanks a lot to you for watching. There's plenty more from the DW Business team here on the DW News YouTube channel. We'll see you over at whatever you choose to watch next. Take care.